Welcome to Global Economic Press, where we deliver trusted global finance and economic news, analysis, and reports, empowering leaders and investors with reliable, timely insights. I'm your host, Alex Brady. In today's episode, we delve into the latest analysis from Rotbart Company, an international precious metals brokerage and storage firm, as they release their findings on Asian gold holding trends ahead of the India Gold Conference 2026. We'll explore how these trends reflect broader regional patterns and what they mean for the global gold market. Stay tuned as we unpack these insights and their implications for investors worldwide. Rotbart Company, an international precious metals brokerage and storage firm, today released its analysis of Asian gold holding trends ahead of the India Gold Conference 2026 in Goa from 20 to 23 August. The analysis points to India's latest quarterly figures, where gold demand fell 5.9% from a year earlier to 130.9 tons, while spending reached a record 21 billion United States dollars. It also highlights recycled gold supply falling to 19 tons, the lowest level in 11 quarters, despite local prices averaging 59% higher than a year earlier. Rotbart Company reads the figures as part of a wider regional pattern in which Asian households and investors are holding physical gold rather than selling into higher prices. Local prices averaged 59% higher than a year earlier. Buyers paid up rather than walk away. Look across Asia and you see the same decision made in different currencies, said Joshua Rotbart, managing partner of Rotbart Co. Indian households chose to pledge their gold rather than sell it. Southeast Asian buyers added bars while Western funds took profits. Across Asia, people see a 60% price gain as a reason to keep gold, and they are choosing wealth preservation over speculation. The figures land as the gold industry gathers for the India Gold Conference in Goa from 20 to 23 August, this year themed Recycle, Reform, and Reinnovate. India, less metal, more money, and no scrap. The most telling Indian figure is not demand, but supply. Recycled gold means gold sold for cash. It fell to 19 tons in the quarter, the lowest in 11 quarters. That is down 17% on the year and 38% on the quarter, despite prices roughly 60% higher. Households borrowed against their gold instead of selling it. Retail loans against gold jewelry reached 54 billion United States dollars at banks by the end of May, up 105% on the year. At non-bank lenders, they reached 34.5 billion United States dollars, up 70%. Gold loans are now India's second largest retail lending category after housing. Policy tightened at the same time. On the 13th May 2026, India raised its gold import duty from 6% to 15%, the steepest rise on record. It came days after Prime Minister Narendra Modi urged citizens to limit bullion purchases. For context, Indian demand totaled 710.9 tons across 2020, down 11% on the year, and is expected to ease further to between 600 and 700 tons in 2026. The same pattern, region-wide India is not an outlier. It is the largest data point in an Asian pattern. Southeast Asia bought more investment-grade gold, not less. Bar and coin demand across Indonesia, Malaysia, Singapore, Thailand, and Vietnam rose 7.6% on the year to 36.7 tons. Global bar and coin demand fell 3% over the same period. Indonesia's demand jumped 40%, among the strongest of any market worldwide. China's central bank added around 20 tons to reserves in July, its 21st straight monthly purchase. When prices paused in the second quarter, gold funds in China shed 22 tons and United States funds 44 tons, while Indian funds stayed positive. Paper positions were trimmed, physical holdings were not. The direction was set in 2025 when global gold demand topped 5,000 tons for the first time, worth a record 555 billion United States dollars. Central banks bought 863 tons. Bar and coin investment hit a record 154 billion United States dollars in value. More than half of that came from India and China. The flows run through Hong Kong and Singapore. These shifts converge on the two hubs where Asian gold is vaulted, financed, and settled. Hong Kong began trials of a central gold clearing system in July 2026, and is expanding its vault capacity under the city's Gold Hub program. Singapore is the region's other principal storage and trading center. Much of what moves through both cities reflects mainland Chinese demand and policy. That makes them the best places from which to read Asia's gold market. Rotbart Company operates offices in both cities. From that vantage point, three things stand out for investors. First, secondary supply is tighter than headline prices suggest because Asia's households are not selling. Second, import policy has become an active variable, as India just showed. Third, the center of gravity in physical gold keeps moving toward Asian vaults. Gold is moving east faster than the headlines suggest. Hong Kong and Singapore are where those flows get stored, financed, and settled, Rotbart said. Policy shifts like India's duty rise show up in these hubs first. It's further proof that the key question for precious metal ownership isn't what you own, but how your ownership is structured and in what jurisdictions your assets are kept.